Hello. Yeah, voice is there. Where is my life? Uh, I can see people joining the live stream. Let's start it. Just a second. One quick check. People join the live stream. Okay, let's get started. Hello, ladies and gentlemen. Welcome to the live stream. Uh, What happened? Jerry. Hello, ladies and gentlemen. Please welcome to the live stream of the Zbit.com. Zbit.com is a crypto exchange platform, and I am a live streamer over there. And my name is Yash Pawar. I come on this live stream, I talk about several aspects of the crypto journey, whether you can learn for how to do trading, how to do market analysis, how you can actually read a market very accurately. 2 days ago, when I was here Tuesday, yes, last Tuesday when I was here, I talked about one market analysis regarding Ethereum, and that's the exact thing what happened in the Ethereum. We will discuss each and everything, but for all of my new users, who like all of my new people, if you are new to this live stream, if you don't know about this live stream and don't know about me, this platform, what we are doing over here, let me just tell you very very quickly one thing, that this live stream is not regarding just live trading and giving you trades and every of those things. This is regarding each and every aspect. I teach over here as well. I try to educate you regarding some strategies, some patterns, some technical analysis, everything. Whatever you have a doubt, we can solve on this live stream in within 4 hours. Okay, I have 4 hours of live stream. So within that 4 hours, if you have any doubt, if you have anything you cannot understand, you don't know how to read a chart, you don't know how to understand, you don't know how to make the chart pattern, make the technical analysis, each and every of those things. If you don't know regarding, if you want to know regarding some strategies, if you want to know regarding anything, whatever you feel like you have doubt, you can ask on this live stream as well. This is live stream not just for the technical analysis, not just for telling you what's happening in the market, what, where to take a trade, where not to take a trade. This is regarding making you a financially freedom person. That is a very important thing for right now period of a time, as we are going forward in the life. We are understanding the meaning of financial. Before that it was just going, earning money, spending it, but now as the world is moving in a fast pace, and so is the money, so is the economic growth, so is the inflation rate, and each and everything, everything is getting expensive. The surviving cost has become more than 4 times the way it was 10 to 20 years before. So right now, in this fast moving pace, we all, each and every citizen, people need a financially freedom, so that they not just like, even like surviving has become a bit of hard in the right now period of a time. So with the additional element of the financial freedom, we can actually help a lot of people understanding how you can survive, not just with very low satisfaction, but with a high satisfaction in the living. That is by adding an element of financial freedom, which is trading. See, I am not saying this that just trading is the only financially freedom which element you can add in your life. There are several others as well, but we don't have options for several others. Now people ask why we have every other options, why we don't have options. We have freedom. Yes, you have freedom, but do you have money? Mhm. No. Do you have money? No, you don't have money. So for that, like, see, financial freedom can come from like adding one business in the side by side. Your side by side money will be coming, side hustle, some startup, some gym, any kind of business, or you are inventing some product, selling it, getting patent, bringing, making a company, making a brand. But all those things requires a bit huge amount of investment. In any case scenario, if you want to open business, again you have to buy land. If you don't buy, then you have to rent it, then you have to like rise up the whole infrastructure, put stuffs in it, then wait for the people to buy it. If you open a brand, then you have to hire people, blah 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 blah. There are so many different stuffs which require a lot huge amount of investment. But there is one such element you can add in your life without affecting your whatever you are doing right now. It like whatever you do, why I said whatever, because every person has different. Some are engineers, some are doctors, some are architecture, some are sweepers, some are anything. I'm open, I'm telling you to all, whatever you are doing in your life, it won't be affected by this element. And obviously the cost of investment will be less, but the return you may can expect high. But that is also, it's not just like you get like you can blindly invest and blind money will start to flow in your life. No, such kind of thing won't happen. You have to, obviously, if you want to conquer xyz part, you have to understand the basics. You have to understand where you are stepping into. Until and unless you don't know where you are stepping into, it's just a darkness, and darkness can either can make you reach heaven or either can make you reach hell. That's what darkness is. You cannot see what is coming in front of you. So for removing that darkness, you can come to this live stream and learn regarding trading, because trading is one of that element which can help you gain a financial freedom without affecting your personal life, your whatever you are doing in your life right now, your job, your business, your career, uh, unemployment, whatever it is, whatever. And this trading is open to all. There is no criteria of requirement in xyz that you need to be this, you need to be this, you need to be this. They don't even ask for your 12th mark sheet, okay, to be very fair. So I'm telling you, this open for all. Less investment but high profit. But see, now profit won't be there for everybody, obviously. Why? Because not everybody will be understanding the whole complete aspect of the market. The whole complete aspect of the market comes within four different parts. First is your news, understanding the news. The one who will follow this complete four aspects, as a beginner, as an expert, as an mid, like an average trader, a mid average trader, an expert level, a beginner level, everyone should follow these four aspects of a trading to achieve a growth in the profit, to achieve a growth in excellence in the technical analysis, so that you are understanding one very specific point, that this is not a game. Okay, it's not like you just tapped into something and you are waiting for, like, okay, I just tapped in, I feel it will happen. No, it requires a bit of a learning. It requires a bit of patience. It requires a bit of psychology. It requires a bit of awareness around it. I will talk about all those four aspects. What are those aspects which each and every trader must know? Because to survive in the market, to gain growth in the market, to gain profit in the market, and to understand the market. Because you have to, before trading, you need to understand one very specific part, that see, market, then what happens? Why this screen goes off? I'm not even touching anything. So you have to understand this one very specific thing regarding the market, that market is not here to give you money. To be very frank, to be very blunt, and to be very realistic. Why I say this thing, that market is not here to give you a money? Because our profit, like retailers profit, the investors, like all the investors, depending on the big player, they don't go for profit. They don't have to worry regarding this profit. They go for the long term business. So they know, like, in a long term, maybe like 5 to 6 to 7 years after, obviously there will be some rise in the market, or there will be fall in the market, and they are okay. They have that kind huge amount of backups that they can sustain these loss as well, and they can use of the profit as well. In both case scenario, they are well prepared. Why? Because they have a team. As a retail investors, as like retail investors are basically the lower class, middle class, upper class. Yeah, those people, middle class, lower class, upper class, like this range, not the richest people. Basically, if I have to give you an idea regarding how, what is a retailer difference and what is a big player difference, we invest max, I'm talking about max, in a month or in a week we may can put 1 crore, 5 crore, max 10 crore in the market. That's all a retailer can do. And see, 10 crore is not even that limit which retailer can touch. But let's leave some XYZ 1 to 3 albinos which may have that kind of money. May have. But other people who are general people, they don't have this kind of huge amount of money to invest 10,000 in one trade. In one trade, I'm talking about. I'm not saying that you are have to invest in the overall 1 month, how much equals to sum up. No, in a one singular trade, not a one retail investor is going to invest more than 10 crore. He probably invest 1 lakh, 2 lakh, 3 lakh, 5 lakh, 10 lakhs max. That's all. And most of the majority of the people are investing less than a lakh, less than a lakh. Okay. So these are retailers, us people. We don't have a huge amount of money. Plus, why? There are two reasons. One, even if we have a huge amount of savings, we try to save it because we know the risk of losing money because we don't have a backup, which is okay. We understand. We can feel each other because we don't have a backup. That's why we cannot invest in a huge amount of investment because that comes like obviously. See, trading, gambling, they are very they have a very thin line in between. Very thin line in between. They are exactly the same as per I have understood the market. As per I have understood the market, like how market works, the similarity between gambling and the trading, they are very like very similar. I won't say same, but because there is a difference in where there is a very thin line. Similar and same has a very one thin line. Similar is like similar qualities but not same. Same like that, trading and gambling has very thin line and it's similar not same. Okay. So in the trading also you have a risk of losing money because you don't understand a market. Now market is not, why I said in the starting that market is not here. I was giving you a difference between retailer and big player. Sorry, so big player may trade in between one single trade, I'm asking. Okay, in one single go they may can invest up to 1,000 crore, 20,000 crore, 500 crore, that kind of in one single go, and that to monthly wise cycle they run. We can as kind of investor with a very huge risk, with a very huge risk we may invest 10 crore and after that we don't have other money to invest until unless we take some money profit out of it or like that capital out of it, then only we can other invest. We don't have such kind of like 1,000 to 1,000 5,000 crore kind of investment to put like every month I can invest 10 crore. No, we don't have it. They have it. This is a difference between a retailer and a big player. Retailer max can go for one single trade is 10 crore, and that too is like for overall year I feel. After that he won't have that huge amount of investment to do if he invested 10 crore in one go. Big player invest one go more than 500 crore, 1,000 crore, 20, it can go up to 20,000 crore kind of stuff. We have seen BlackRock CEOs highest inflow has ever been done for 1.17 billion, which is approximately, if you calculate into the INR, it will be approximately 23,000 crore. 23,000 crore. Just imagine the amount which was seen in a one single day. And obviously it's not like that if in one single day we got this much, the next day will be nothing. Obviously there will be more coming from more other people the next day also, because they are big players. Are who? Big players are just institutional people, big brands, big huge companies who have such huge amount of like profits, capital income, whatever xyz you want to call it. They have so much that they don't know where to put it. So they find such a way, like it will be safe. It will also, like, even if it loses some money, they don't have a worry about it. And if it gains money, then that's the future return for them. Every, just understand this one thing, not a single big player is a short term short term profit earner. Okay, not a single big player is never ever aims for a short term earn. Never ever. Short term profit, they don't need it. They're always and always thinking about the future interest, ROI, like future, what I can get in the future, what is useful for me in the future, how I can be number one, number two, number three, top 10, top 20 in the future. Why in the future they are thinking about? Because cryptocurrency is one of that currency which is has very minimal use cases right now. Overthrowing a complete is same like, for example, if I give you an example, okay, everybody in this whole earth knows A B C D E F G H, like you get it, the alphabet A B C D, everybody knows it. Now if I come today and I say ki like, okay, from today we will forget the ABCD, and I have bought a new something for you, you have to learn it, nobody will accept it, because their mind is fixed, their mind, their roadmap, their whole brain wired is fixed with learning that ABCD from the childhood, and you cannot change that in a single go. Same thing which is happening in the cryptocurrency. Now cryptocurrency is giving you an alternative that, rather than giving like a free money, free giveaway money for to the banks, to the governments, they have bought one transaction platforms. This currencies is not controlled by banks or by the governments. They, like you see, there are centralized platforms as well. Like what is centralized and decentralized have a two different meaning. Centralized platform, the coin is not controlled by the government, but the platform, like earning of that platform has to get license and blah 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 to run a platform for public, like us. This Binance, OKYX, or Zbit is all for public. This is not for the, like those big players. Big players, basically the one who is turning the market upside down, they go for ETFs, exchange trade funds, because even if they come on some public platforms, any, like right now the top one is Binance. I'm just giving an example, we are a very new one which has came into the market right now, but I'm giving you example of the one which is right now in the top number one. Okay, even if one big player comes to a Binance regarding that, I want to liquidate XYZ amount of money, he cannot do that. Why? Because big players money is huge. It's like if they ask for liquidity, Binance has to withdraw 80% of their whatever live pool money they are having to that person. That huge amount of money there, like 80,000 BTC. A guy came, a 14-year-old wallet was opened in the 2 to 3 weeks ago, 2 to 3 weeks ago, kind of 2 to 3 weeks ago. 180,000 wallet was open, 80,000 BTC wallet was open. He didn't went to any public platform because he knows one thing for very sure: 17,000 BTC he liquidated, due to which we saw a very huge crash in the market. 17,000 BTC got liquidated, and there was not one single public platform which was ready to offer him that huge amount of money. 17,000 BTC, what would it worth in INR? I want to see. Let me see. 17,000 BTC value. Okay. What it is. Billion, tell me in crore, bro. It is 17,714 crore, 17,714 crore worth of BTC. Obviously, any platform is not ready to give 17,000 crore to a guy as a withdrawal. It is not possible in any of those public platforms. Where did he go? He went to some other ETF called Galaxy Digital. Okay, so this big player has no correlations with the Binance or any of the other platforms. They are manipulating investing through some different platform called as ETF. Very few might come, but big institutional people like this, they will never come to public platform. That is a very surety. Okay. Other than this one thing I was talking about, I was talking about something. Yeah, financial freedom. So with the trading, there are major four aspects which each and every trader must know in terms of knowing how the market works, best way of market to work, because market, like I told you, there is a very thin line in the gambling, and market doesn't want you to win. There is a very specific reason for it. That one specific reason for the market not for you to win is because the profit works in a vice versa way over here. Market's profit is your loss, your profit is market's loss. Okay, so due to this reason, we are not like, once a investor has a profit, market doesn't have a profit with it, because he is having outflow. Money is going out of his life pool to this bank account, this capital account, or whatever. And whenever a retailer is getting a loss, the money is going outflow from his capital, bank account, whatever, and going to where? Going to the market. Okay, so this profit and loss works very in opposite way. That's why, to be in a profitable scenario, obviously market makes a very uncertain movement in the market of manipulating it, putting a lot of like liquidity traps where you are getting trapped, because at the end, if I am the owner of XYZ thing, I am having a complete 100% authority of knowing where and what is happening in my app. The same way, like, they know this one very specific thing, that where is your stop loss, why and how they use your stop loss in making you loss. See, it's in according to my opinion, there are two options for it. One is a correlationship between the platform and the big player. Other thing is just the market with no correlation with the big player. I will explain you both of the scenario. One, first I will explain you the correlation with the big player. See, for example, if I found out that there are many stop losses under this swing, I can see, like, from this point the market went up, again it came down, again went up. So this became my very strong swing of the market, that this has become a very good, perfect buy entry for me, that because it is creating a demand is being created twice. First time it came straight up down, straight up. Okay, after that again it came, and from that demand zone, again the market went up and created, I think, yeah, another, not, I won't say all time high, just like 1,000 extra. It's not that much, but created another all-time high from this range. So for me, this becomes one of that platform for a demand zone, that I know from this is a very good and strong point, where even if a market comes down again, it will try to go up again. So what people will do, people will try to put a stop losses at this point, little below this point or at that point, because that know that it is a very strong support zone, a strong reversal situation. So even if the market is right now over here, if it tries to pull back a little, it can tap into that zone and then it can go up again. This is how demand zone works, which everybody knows, even with the market. Okay. Now, with a market knowing this situation of how it works, how it happens, the market with a correlation, like I was saying in the first example, first opinion, which I believe how market fools people is with the correlation with the big player. Big player has a huge money, huge money. He wants to sell, like whenever he's selling it, he's not selling a very small quantity, he's selling a huge quantity. Now people want to buy, like once there are obviously all the time there are two people constantly in the market, constantly. There won't be a constant buyer, there won't be a constant seller. It cannot happen. It is like hell and heaven cannot match. Same way, like buyers and seller has to be there. So each and every time wherever such kind of thing happens, market will try to have a little we have this two behavior, fear and greed. With the greed, market went up, now it is at a very top point, at the all-time high. All-time high always comes with a risk for the retailers. Why? If a big player invests, then we can go and break another all-time high. Until and unless a big player doesn't invest, we cannot go up, because their money is the one which can lift up the market and make a profitable trade for the retailers, because their money adds up the value in the market. Our money don't do anything. Like we are at our own for the market. Okay. Like our loss can be market's profit, that can add up a value, but other than that, no. So once we reach over here, we need a big player at this moment, we need it. If we don't have a big player, obviously the market is gonna go down from there, because the retailer are gonna think in a investor's behavior, which is greed and a fear. Greed happened over here, that's why market went up. It's in the point of an all-time high situation. Fear will trigger, obviously, that it is in a too much value price right now, and it has high chances for it to fall down. Got it? Simple. Hmm. Go ahead and put the charging. So in the first scenario, the market will ask for a big player to enter for a sell side and do heavy selling. Is selling, 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 and it will try to bring the market at this moment. And as you can see over here as well, see what was our point? Rectangle. This was our this was our demand zone. because from that point we have seen the market has taken a huge demand before and created an all-time high. First demand came, then the second came, touched the all-time high. Now it was falling. This fall can be, as it is a small candle, it can be result in the heavy selling options, which can be triggered by market or by the big player. Either big player is putting a sell orders so that these people are going for sell, or huge heavy selling, the quantity wise I'm talking about, or the market is just putting the whole market down by, I don't know how they do it, but they can do it. Okay, so after that, when it coming down, now there are 2 to 3 places where market may stop and try to take a pullback, a pushback. Like this was a point where it happened twice, and till that point again the market came from this swing. This is our one swing, and this is a second swing coming here. Okay, after this swing, as you can see over here, a little push up from the market, a little, very little. Now this little push up is a sentiment. Understand the sentiment trading and a technical trading. Sentiment trading is what? That, as if, for example, if I spotted a fair value gap, this huge one is a fair value gap at this point. Okay, fair value gap, this is a fair value gap. What is fair value gap? Fair value gap is basically three candle is there, and the middle candle has a gap between the third and the first one, as you can see over here. The red one is a first candle and the green one is a third candle, and this is a second candle in between. Now the first candle and the third candle is having a huge gap in between. I can draw that gap. See, this gap from here to here is our what? Is our fair value gap. Okay, so wherever a people see some things like which is supposed to be chart pattern, for example, a double top pattern, we all know that from neckline the market will try to fall. Double bottom pattern, we all know that from neckline the market will try to go up. Bullish pennant pattern, we all know from this pattern somewhere over here we can get a breakout and market will go up. Head and shoulder pattern, we all know from the neckline it will start to fall. Reverse head and shoulder pattern, we all know from the neckline it will start to go up. So there are such technical things which is there, and it has told you what outcome may come in the market. No surety for it, but may come. Now, same way, fair value gap is not a trading technical analysis or something. It's a strategy that we know that a gap like this, a fair value gap like this, is only created by a huge investment. Now, we understand this one concept that the huge investor comes from where? Comes from big player. So, a big player actually has a very huge big player actually has a very huge investment to put, which he cannot put in one single go. If he puts in one single go, then there will be one very straight up line, which a market won't allow, and that they also don't want to do. So what they do first, like for example, if they want to have 1,000 crore investment, first 500 crore investment will be here, then again they will let the market go, again they will start to fall, and then second order get placed over here. This is a limit order which is left of the big player, first one and the second one somewhere over here. Okay, now this is a common understanding of a fair value gap, that whenever at a fair value gap market goes from there, fallbacks at that time, it will collect the fair limit, like rest of limit order, and will try to push back. Same way, like you can see over here, this was a fair value gap which is here. Market fall down, went up, again tapped in. This is where the limit order got placed and straight up. Getting it? But sometime limit order is an option. It is not a guarantee. Why? Because what if there is no limit order and there is no way of us to know if there is one or there is not one? There is no way for us to know. We can only guess it, By plotting our this triangle for fair value gap, we can plot our fair value gap and we can wait for a market to give a little pushback. Now whenever we see a pushback with small candles, those are not a limit order, because limit order will look something like with a huge big big candles. Okay, if there are small candles like this, then this is nothing other than sentiment trading. Sentiment trading means what? That they know one thing, that market has came to the fair value gap zone. Now this zone, one second. Azadi. Oh, by the way, it's Independence Day of India today. Happy Independence Day to all. Hmm. So this thing over here is called as sentiment trading, where you see a little pushback from the market. This is not from the big player. The big player limit order is not there. It is an early buying of the retailers that they know for this fact that the fair value gas has been hit, so that the market has came into the zone of the fair value gap, so that from there a little push up or the market will now go for the buy. So at whenever point the fair value, the market comes to that fair value, a lot of people buy in an early stage, so that they know this for fact that from fair value the market goes up always. But it is not always. It is there, the market goes up only when there is this situation, there is limit order which is hit. If the limit order is not there, the market won't go up. Okay, cool. This is a sentiment trading. A lot of time it will try to go up, and from that exact point when the lot of did you guys mention about a television to open the live stream? I didn't try. Yeah. Okay. So this is the point where the market takes advantage of you. A little buying comes. Obviously, these are just three candles, but even though it is a three candle, there will be a lot of people putting their stop losses at this point. The previous stop losses, the new stop losses. All this combined, market knows this thing that there are a lot of SLs pending over here. At that point the market, with a big player helps or with his manipulation, it will make the market fall down to grab all these stop losses which is there. Now once your stop loss get triggered, your money is gone, but that money is gone where? In the market's pocket. Simple. Okay, so wherever there are huge swings, where the huge swings like this, from where the market has not came down, there are high possibility that market will tap and try to go little beyond that level, so that whatever and wherever the market stop losses you have put will be triggered and market will earn money from it. Same thing what happened. See, this was one of that major swing, first major swing and third, fourth, the Okay, now they know that from this region, the whole market stayed up for a long period of time. Now this has become a very good point for all those people who have bought it at this point. Stop loss, 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 stop loss. Market came exactly below that level to come and grab each and every stop losses. There is one uh, good, there is one very good indicator which won't tell you regarding the like which won't alert you for like this is the place where the liquidity trap can happen, but it can give you an awareness. That indicator name is called as inducement stop hunt TFO. Okay, this is that indicator. This indicator tells us about where previous liquidity was grabbed. Previous, not the present one or the future one, but a previous one. Like, because every indicator, they work very best in identifying what happened previous, not in the future, not in the present. Because present data is a very variable data, it is not a very constant data. It differs time to time. We never know when the big player will come and manipulate the data, because at the end all the indicators are doing what. Why I don't tell you like to go for an indicator for buying or selling situation? Because at the time of buying and selling situation, indicators are what? They are just a systematic calculations which collects the data, processes from that calculation and gives you a result. Okay, now if there is a sudden buying comes from a big player, obviously that data will tell you a crossover, a buy situation. And from that exact moment, if the next moment the whole big player will get the market down, again another crossover comes, so it becomes a false signal for us. Most of the time the crossover signal indicator gives you false information. False information is not regarding that the indicator worked bad. The data which is provided to an indicator to give you a result is false. Suddenly a huge buying comes, obviously he's going to give you a crossover, and from the next 5 minutes a huge selling will come, he will give you another crossover. At that time you don't have a time to process, like you don't have to time to process whether to go for buy, whether to go for sell, whether this is just a normal retracement or this is a complete crash of the market. You cannot know from an indicator. That's why whenever you are using an indicator, don't use such indicator which can give you a signals for buy or for the sell. Rather than use such indicators which can tell you regarding a possibility of such like liquidity indicators. Inducement slash TFO is those where the maximum stop loss has been triggered. Your SL where has been triggered maximum time. Okay, all these indicator like let me just make it more clear for all of you people. Just go on this tile input. From this dotted you can do this solid, so it can give you a good, yeah. See, all these lines are the places where maximum stop losses were hunt by the market, by the big player, it doesn't matter. They don't give you the reason, they just tell you that this was one point where the maximum liquidity was grabbed, this was one point maximum liquidity was grabbed, this was one point. And once you observe this, you will feel this one very specific thing. Wherever there are swings, okay, what is swing? Swing is swing, 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 swing. These are swings basically. So you can see this one thing. Arey yaar, it became dotted again. Okay, so you can see this one thing all the time. Wherever the liquidity has grabbed, swing, 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 and all are grabbed at swing low. because that is a point where you will see longer wicks will be there of buying pressure, longer wick, big candle. Either it will be big candle or either it will be a longer wick, which tells us that lot of buying has happened. And if a retailer has bought it, small candle will be there to identify very easily who is retailer and who is big player. Big candles, big player, small candles, us retailers. Our investment value cannot make a big candle. Even if you sum up, even if you sum up all the retailers buy orders at one point, that value won't be above 10 to 20 crore. Won't be above that level. So we cannot make a big candle, because big candle needs, if you want to create a fair value gap, that means you have to do a huge heavy investment, which we cannot make. So to easily understand, wherever you have seen long lower wicks, that means rejection was there from the market. They came to one certain point where the fear was stopped and greed triggered into the retailers, that this is a very lowest point the market has came. And from this point, a lot of heavy buying will come because of greed. Whenever they see the price has came down to very cheapest part, heavy buying will come. Whenever they see the price at the very highest point, heavy selling will come. This is the nature of a retailers, because they fear it. Okay, now wherever you will see longer lower wicks or longer upper wicks, these are a places of maximum liquidity traps. Maximum, because this rejection longer wick, either it is created by natural way where the retailers are actually buying, or it can be manipulation of the market as well. There are two possibilities. We can never know what it is, because all the data which has been provided to us is just this. That's it. The candles, some very abnormal patterns. These are the ones which is given to us. In that, you have to understand the four aspect, and you have to take out. You have to analyze the past, present, and present continuous, and then you have to predict what a future holds for you. It's very simple. Okay, now those four aspects. Just a second. This indicator will tell you regarding the previous liquidity grabbed, previous stop hunts where your previous stop loss was hunt, so that you can be prepared. Like, see it, I wouldn't say that it will be in the same level, but you can get an idea like at what swings a market grabs, generally grabs the stop losses or try to trigger them, so that you will be aware regarding it. Now obviously, as this was the lowest point, the previous lowest point, now it has given a new one. Next time if the market wants to come down, it will try to come down at this point to grab the stop loss, or the this or this or this. These are the swings. First swing, second swing. Now this is doing a third consolidation right now. It made a double top pattern at this point. Okay, that's how you can understand. I won't suggest you any of those uh, indicator which gives you buy or sell signals, because they are not trustworthy. Sometime yes, sometime no. Now, what we were discussing, yes, four aspect. First, news. You have to know what is happening out there. Global politics, GP, global economics, global trade, any war situation. In global politics, you will know about war situation. Global economy, you will know which country is doing some good things for the economic, if they added some Bitcoin reserve or not, if any regulations regarding Bitcoin. Global trade, if there is any something happening where the global trade between two to three countries is affected. Like we have seen recently the tariff attacks from the US, but they are not that huge, very small, in a very small number they have given a tariff attacks. But again, this tariff attacks will trigger the trade, which will trigger the business, which will trigger the market. Now market is not actually directly linked with this situation. Crypto has nothing to do with what is happening in the country. Why it affects this? Because of the sentiment of the people. Like I told you, there is a one very big issue of sentiment trading. Sentiment trading happens when what is a psychology of a investor is thinking. Like if they are in a positive note, they will try to buy more. If they are in the very negative note, they will try to sell it. Now this will affect from the news. If they see any war happened between two countries, so they will obviously will try to save their losses, because they will think that the war may escalate a trade to fall down, due to which the market will fall down. So they will, the sentiment will trigger them before that. Now a very something big negative impact is about to come to the market, so I have to do a heavy selling before to save my losses. Same thing will happen for a positive note. If they see some crypto regulations have came, government has made a crypto reserves, some ETF is opening for Solana or XRP or some new coins, and ETF is launched. So once an ETF is launched, there is a heavy chances, high chances, like 90% chances that now more and more institutional, more and more big player will try to invest in that XYZ coin. Solana didn't had an ETF before. Same XRP didn't had an ETF before. They are about to make an ETF for it, which will help other people. See, like what has happened right now. Bitcoin has reached that level where even for a big player, it becomes hard to do investment. It has reached at that level. Okay. If there is something which has reached that level for even a big player to buy, obviously they will try to find substitute for it. Like if I cannot do this, I have to do this, because at the end every big player is right now grabbing most of the cryptocurrency, because that's a face of the next gen, face of a future, financial face of future, to eradicate something which is going very unnecessary. Like for example, if magic is happening over here, they see like, see the magic, but actually it's happening over there in that room where a huge money is flowing. Bank, just by giving us services for transactions, in an year wise they earn 500 to 600 crores just for the transactions. There are no loans, there are no interest, nothing, just for a simple transaction. If I send you money, you send me money, with this they earn up to 500 to 600 crore, okay, just from the transaction. So eradicate this huge amount which they are collecting in their pocket, and they must be doing some other stuffs with that money as well. To eradicate that situation, cryptocurrency came, which doesn't have any medium of bank or the government, no control over anything. Okay, so now in that situation, oh, this is it. So in that situation, what happens now? Big player has huge money. Before they were little afraid because of the bank, because anytime a government can do a tax on them, or the bank takes a huge interest from them, transaction, blah 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 stuff. Now they have found a way that they don't have to be bound to rules, certain rules, regulations. Now they're open, their money is open, they are open. Now they can do anything, invest wherever, in whatever amount they want to invest. So as a big player is also struggling to buy BTC, they will try to buy a substitute. Substitute has become Ethereum, which we can see that's why it is growing up. Okay, next substitute, a very good coin, Solana comes in, I guess, top five. Solana is fifth, according to me, the last time I have seen. Home market crypto overview, hashtag something. Solana. Can I see Solana somewhere? I just want to see what number it ranks. See, these are the ranks, like top 1000, top 2000. There are several coins. Okay, I just want to check where Solana ranks. Okay, Solana is sixth number. Last time I saw it was fifth, but okay, Solana has came to sixth. So obviously the people who are there, like big players, they will try to, they obviously they won't focus on the coin which is at the 1000, below 100 or some that kind of coin. They will try to focus on the coin which is top 10 or top 5 max. Top 10 or top 5 they will try to focus on. In that top 5 they will see which has the coin, which is that coin which is having a maximum supplies or limited supplies. The coins which has a limited supplies are the coin which grows very fast in a value. Why? Because it terms in a rarity, like we don't have that much to give you, which becomes into the rare selection, that it is limited. It will be closed after some point, wherever this normal circulation will happen, just buying, selling, buying, selling. That too, if a person is selling, then only I can buy. Okay, till that point what you have to do is get a hold of that. Now Solana comes in a six. Solana's new ETF is about to launch by an October, if you know this news. And obviously once an ETF is launched of Solana, and it is a top 6 rank in the ranking, it comes in a sixth number, which is not a bad one, obviously, in compared, if there are millions and not millions, I guess there are almost 50 to 60,000 coins. If there are 50 to 60,000 coins in that, if there is something which is coming in sixth rank, obviously other big institutional people will try to see that price is at just 195. They can actually buy a huge amount, like 1 lakh, 2 lakh, 3 lakh, 4 lakh, 10 lakhs worth of coin of Solana, and can hold it up to when it becomes to, let's say, 4,000, 3,000, blah 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 blah. Same goes for XRP. XRP is in the third rank. Now this third rank value is what? Just $3. This doesn't mean that if it's ranking on $3, obviously there has been a very huge investment, very active transactions, and also use cases of that XRP. Now ETF of XRP is also coming. This will boost the price of XRP very soon. It can maybe go to 4, 5, 10, 20, 30, or whatever. This kind are the coins which ETF comes, and they're also in the rank of 10, are the coin where we should be investing, because big player will invest for very, very sure. They won't leave a spot of such kind of coins where they have an opportunity where they can get a hold of maximum value in a less investment. For them, $3 coin is not that much. Like if you, for example, if Meta Planet goes to buy 500 BTC for worth of like millions, billions, he invests to buy some hundred amount of BTC. Just imagine if I just spend that millions, billions in buying an XRP, which value is just three. Just imagine what kind of quantity he can hold for XRP, what kind of quantity he may can hold, which can give him a future profit of gaining a lot of profit when it goes to 4 $10, 20, 30, 40, 50, or maybe above 100. We never know. Okay, so this you can get an awareness from where? News. Okay, like I am about to share you one news. I want to share you one news of the same scenario. Okay. So the first news which I want to share is Solana's ETF faces a Security Exchange Commission delay. Decision postponed to the October. What happened? We will discuss it right now, right here. Several companies, Bitwise, 21 Shares, Canary Funds, and Marinate Finance want to launch and Solana's exchange trade funds in USA. This US Security Exchange Commission was supposed to decide some of this proposal by August 17, 2025, but now the Security Exchange Commission has postponed its decision to October 16. It is just creating more and more of curiosity regarding the Solana, where a lot of interest will be there. If it's same like if you make a person wait for something, they crave for it more. Okay, so if they crave for it more, there will be huge buying. Huge buying will result in heavy like heavy investment. Heavy investment will increase the value, which will give us profit. Okay, now why the delay? This Security Exchange Commission said it needs more time to carefully review the proposal. This extension is a part of their official process, and October 16 will be the final deadline to approve or the reject the application. Who is affected? Main companies involved: Bitwise, 21 Share, Canary Funds, Marinate Finance. Bloomberg ETF experts James said we probably won't see more ETF proposal like this for now. Was the outlook despite delays? Some experts are optimistic. Sorry, not net, Nat, the president of the ETF store, believes more ETFs, crypto ETFs, are coming soon due to strong investor interest in Bitcoin and Ethereum's ETF. Like I told you, this has become a trend. A lot of institutional people are actually backing up their shares and each of things to buy Bitcoins and cryptocurrency like Ethereum and blah blah shits. Okay, which probably is the number one, number two, number three, number four, those kind of things. Okay, now, not like I said, Bitcoin is out of our hand now. We cannot touch Bitcoin because that kind of price to buy is not capable of our pocket, our finance, our, I cannot say that word, but it is gone from our reach. We cannot invest in Bitcoin anymore because it is in that huge level that we cannot hope to buy even one. And one coin is always a risk to buy for a Bitcoin. Okay, so in that scenario, the people, the big player also is facing the same issues. Not all the big players are, because they also have some rankings. Obviously, not all the big players are rich. Some are, in their society there are poor rich people, there are rich people, there are vomiting rich people, and there are crazy ass rich people. Like, okay, they also have a hierarchy of richness. Like we have hierarchy from middle class to the upper class, they have hierarchy of the rich to the richer to the richest. Okay, and then the extreme which controls the whole world, that is a separate, they live in a different colony. Okay, Mars colonies. So in this situation, other investors are going for some coins which they can buy. Not all are following Bitcoin. Some are in pseudo are following other coin as well, which we cannot see. But let me give you one website which you can actually track 100% track a whale in a market, what whale is doing, where he is investing, how much he is investing, when he is investing. Okay, it is, the website is called as gmgn.io. This is a website where 100% you can track a whale. Okay, with this, what happened? I'm not getting this. It's not. Okay. So the NAT, the president of ETF, believes more crypto ETFs are coming soon due to the strong investor interest in Bitcoin and Ethereum ETF. New regulation pushing the crypto investment product forward. Andres, wow, Andres, risk manager at U Holder, says that while Solana and Polkadot have potential, they are still seen as an experimental compared to the Bitcoin and Ethereum. What's happening with Solana's price? On Thursday, Solana jumped to 2009, showing a strong demand. According to the coin glass, many investors are placing a big bet on Sol in the derivative market. Open interest, a total active contracts is near record high, a sign of a strong confidence in a further price increase. The crypto market saw 800 million in liquidation in 24 hours, including 50 million in Sol's long position. Bet price will go up. The SEC delayed its decision on Solana ETF to October 26, 2025. Experts believe approval could still come around that time. Solana price is rising, driven by the investors' excitement over the potential ETF. But some analysts still view Solana risky compared to the Bitcoin and Ethereum. Yes, man, like it is very new. That's why it's called as altcoin, an alternative coin, not a stable coin. It is not a stable coin for you to understand, but we have to invest into Solana and XRP because they are at a very cheap price right now. Once we see some price surge will come. Not a single that Solana and XRP are one of those coins which will have a potential to go up. Maybe let's say Solana can go up to 500, XRP can go up to 100. This is a point where we can exit. We don't have to wait for them to become a Bitcoin or to become an Ethereum. We can actually come and take our profit and go. Very easy, very simple. Okay. Now, the other the other news, like like Ethereum's ETF just hit a 1 billion net inflow, and could that spur the altcoin rotation this weekend? What happened? On Monday, US Ethereum ETF exchange trade funds received 1 billion in the new investment in a single day, a record breaking inflow. The biggest contributor were BlackRock ETHA fund 640 million and Fidelity ETF, which was 277 million. Total money in the ETH Ethereum's ETF is now 25.7 billion, and 100.8 billion has flowed since the investment cycle began. Why this is important? The big inflow into the Ethereum shows the strong demand from the investor who wants an exposure to ETF. When the ETF attracts, like Ethereum attracts this much attention, it boosts the entire Ethereum ecosystem and whatever coins are working in the blockchain of the Ethereum. Solana is working on the Ethereum blockchain, by the way. Okay. And DeFi, centralized finance app, layer 2 network and infrastructure and utility tokens. How it affects the crypto market? More money into the Ethereum ETF, more liquidity, cash in the Ethereum related to the market. Derivatives like futures and option, staking platform, liquidity pools. This can affect the funding rates, lending demand, trader behavior in Ethereum connected tokens like Solana and all those kind of stuff. Signs of spillover. Ethereum outperformed the Bitcoin in the July. ETF rose 49%. Bitcoin rose only by 8%. Decentralized exchange on Ethereum saw 24.5 billion in the volume over 48 hours, 2x more than Solana's DEX. More wallet and daily users are interacting with Ethereum DeFi protocol and layer 2 like Arbitrum and Optimism. To watch this weekend altcoin rotation in the Ethereum inflow keep coming, we may see a shift of capital into the other altcoins, especially layer 2 network Arbitrum, Optimism, DeFi protocol, Uniswap, Ave. AI tokens render RNDR, okay, and fetch.ai, FET. This sector benefits with the Ethereum growth and as user look for a cheap trading, better yield and new opportunity. But this is a caution rotation. This potential alt season isn't based on the hype. It is based on the real use cases. Platform grade, strong utility. Traders are putting money into the quality project, not just anything trending. $1 billion inflow into the Ethereum ETF shows a massive investors interest. This is driving growth in the Ethereum ecosystem, especially DeFi and layer 2 network. This is the trend continuing. Money could rotate into the select altcoins over the weekend, but rotation will likely favor strong, useful project over speculated ones. Like I told you, whenever you are investing in some any of those cryptocurrency, you don't have to just go for a trend. Like this is having a lot of investors. This is why the big people are getting this and blah 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 blah. But you have to go for a use case scenario into the real time world. What are the use case scenario which we can use in the present and in the future? If there are high use case scenarios in the future, then we that coin may have a more huge interest of the buyers for the investors. Like big player or the retailer, they will go for such coin which have a high use cases in the future. Okay, cool. So these are the news which you should be knowing. News which is global politics, global economy, the trades, any war escalation situation which can trigger a sentiment trading. People hear something, they feel something, they put them into the action. That's what a sentiment trading works on. Okay, it can work for the strategies as well. It can work for the demand or supply zone as well. It can work for the war kind of situation. It can work for the tariff tax, any kind of situation where people intake some knowledge, they process it into the head, and they put it out the outcome in the form of maybe positive trading, which can may trigger them in buying a lot, or it can trigger in the negative trading, which can make them in selling a lot. Okay, these are the sentiment trading which comes from the news, which has nothing to do with right now data or anything. Whatever is happening outside the crypto world which affects the sentiment of a trader, big player or the retailer. News is one of those factors which can affect both of the people, even the big player and also the retailers. Okay, now the next thing comes for is technical analysis. Now technical analysis is a huge vast topic, very huge. Technical analysis doesn't mean that you're just observing, putting some indicators and waiting for it to cross over. That is my technique. No, that is not, that is stupidity. Okay, for you to know where what is the best way for a technical analysis, you have to observe each and everything. The fair value gaps, the smart money concept, you have to understand the demand zone, the supply zone, the chart pattern, the candlestick patterns, the liquidity concept. This all comes in technical analysis. Understanding, reading a chart, what we can see at that point, rather than relying on an indicator. Okay, because relying on the indicator will just gonna affect your trade in whatever scenario, in maybe in the positive way, in the negative way, but it can affect. That is for very sure. Okay, now other than this, technical analysis is a very huge part. I have already covered most of the technical analysis. I have told you regarding like almost three strategies I have shared with you. I have completed my chart pattern, candlestick patterns, liquidity concept, smart money concept, fair value gaps, each and every of those things which is very necessary for you to know what will happen in the market. Okay, regarding that, one technical analysis example I want to give you. Okay, yes, like 2 days before my holiday, I gave you one trade in Ethereum that I can spot one bullish rectangle pattern at this point. Not day, sorry. 1 hour, 1 hour, 1 hour. Where is here? 1 hour. I have told you that I can spot one. We have spotted that one bullish rectangle pattern. I have wrote it as well over here, and I have given you one position where a reversal can come. We were here somewhere in the market from where the market was falling. There were two options: either from the fair value gap, the market will collect the limit order of a big player and will try to jump above, or it will come to the support position and it will try to go up bullish. And you can clearly see from exact that bullish pattern. I told you, whenever you have a breakout, go for a buy situation. Maximum target you can get it from 1:2 reward ratio, 1:5, 1:6, depending on the big players investment. Why big players investment? Because retailers are worthless in the market. Our investment is like, even we put money, even if we don't put money, the market is just going to stay in a sideways market when we are there, until unless some big player comes with a big huge money and they are the one who can shift the market above. So when the big player came and gave a crossover, you can clearly see the candle difference. Big candles, big player candle, small candle, R candle. Why? There is a one very clear myth in the crypto market that a big candle is created by a big volume. False knowledge. Big candle is always and always created with a big investment, not a volume. Understand this point. Because if you go and check out, even the small retailers candle have a big volume. Number of people are huge there. But what about the investment money? It's small, that's why small candle. Because in here, there are two, if you want to know like logic behind it, there are two scenarios. We vary our data between our time and value. We don't value it by the number of people, number of investors, number of trades, number of this. We don't value our data according to that. We value two. In the like in the vertical side, we see the value, and in the horizontal side, we see time and money. That's all we value our data from. So how a big candle means a big volume? It is just one basic thing, that at that moment, the price has went up a lot because of an heavy investment, not by the volume. Very simple, very easy to understand this thing. Don't confuse yourself by understanding that a big candle is a big volume. No, there is no volume over there. It's a big investment. So whenever you see such kind of candle, big, huge candle, that is a point where we can go for 1:5 risk reward ratio, 1:6 reward ratio, because big player entered, they will make the market go up. And once one previous all-time high is broken, our previous all-time high was 4,000, then became 4,200, then became 4,300. Now that 4,300 was about to break, that means obviously market can go 10%, 5%, or 6% above with the help of big players investment, not with the help of retailers. Okay. So this is an example of a technical analysis. What we saw a chart pattern over the Ethereum platform. We saw a chart pattern of a bullish rectangle, then we saw the fair value gap. We decided what to do. We waited, we had a patience, and at that point we entered at the platform, and almost we had 10.40% market went up. Like I told you, whenever a previous all-time high is broken, we expect from the market to, at least the least it can go is 6% up. Maximum we can expect is 10%. 10% is very common, but not so common. Sometime it will stop at 5%, 6%, and it will try to retrace himself. It will have a little small pushback, try to collect another limit order, and it will go up. Same way which we saw at this point. Market gave us a breakout, went straight up, created a new all-time high, which is almost 4,800, very close to touch 5,000, very close to touch 5,000. Okay. And we have seen this in a very 6-month growth. In the Jan 2025, when the tariff attack was given by the Trump, we saw all the coins were below. Ethereum was almost 1,500, 1,400 was trading at. I have told you this one very specific thing. Whenever you are looking at a coin, top 10 coins, top 20 coins, which is trading below its average price. One is all-time high. It will fall down to make its average price, where it will make major swings, or it can make sideways market, or it can give you up or down trend. Okay. From there, two positions are always open for a coin. One, if it breaks above, that is your price is moving either for the all-time high, either for an overvalued, and it will go trigger the fear, fall back to an average price zone. Or the second scenario, from the average price zone, majority of selling will come, it will fall back, it's below average price, create a fear, create a greed that it is at the cheapest price right now that we can have to buy. Similarly, from the Jan 2025, we saw the Ethereum was at 1,400, 1,400, 1,500, 1,600, and boom, straight up after 6 months, what is the value of right now? Right now, we are seeing it at 4,600, but the all-time high was created at 4,800. The value, the difference between the cheapest value and the highest value. And I don't believe at this point that Ethereum will give you another option like that. Why? As we are seeing, ETF of majority of the coins are being available for the big players, for the institutional people to invest in those coins. For those people, if you filter out some situations, Bitcoin is overvalued right now. Like, even for a big player to buy a certain amount of coins, like let's say 500 Bitcoin, 1,000 Bitcoin, 2,000 Bitcoin, it takes huge investment, which even a big player is afraid to make or afraid to take. So they have alternative. They have substitute coins like Ethereum, like Solana, like XRP, whose ETF, Ethereum ETF is already there. Solana and XRP ETF will probably come by October. So more and more demand will rise for that, because it has become a trend for a corporate people that they have to back up their company, back up their asset, back up their property, back up whatever there is to back up with BTCs, because it gives them huge profit in the future aspect. Because we have seen one thing very clearly, that yes, Bitcoin has high volatility, no doubt in it, that it falls very heavily and it goes up very heavily. But that affects for retailer, for you and me, because they don't take their money out in 1 month, 2 month, 6 month, 7 month. They go for heavy investment for long period. After 10 years, they might take it out. After 20 years, might they take it out, and they blah. Because for them, they are having a backup money to enjoy their life, because they are big players. Okay. For us, we don't have. That's why we invest. That's why we want to go. But I have given you one very clear, very good strategy for that. In the trading view, in the overview, you have filter out situations. See, one is all coins, where you can see the ranks from 1 to whatever, top 10, top 20, top 30, top 50. In that, what you need to do is, or there are other filter as well. Never ever buy the coin which is having highest supply. Why? The coin which is maximum available for a lot of people are those coins which value will never go up. The coin which is having the lowest supply will always tend to increase their value because of the demand and the lack of, like, FOMO will happen, like fear of missing out. Why? Because the limited supply is there. With a limited supply, people want to have that thing in their hand because it is limited. Whenever any if I give example, if there is any car, if there is any bike, if there is any product, if there is any phone, if there is any property, if there is anything, and they sell it with the concept of that this is a limited edition, more and more demand will come for that situation, because they know this will be one of those situations they will brag about, that I have one of those things that is limited edition. Okay, so in that situation, whatever is limited in the market will always have a high value. And there are still such coins which are low in supply, but and also low in value, like under a zero. For a retailer, if you want to earn money like a big player, if you want to earn money in the term of not your day-to-day transactions, your day-to-day life savings or something, but you want to actually make a generational wealth kind of situation. Okay, so for that, what you need to do is basically come to TradingView platform, look for the lowest supply coins, see which coin is under a dollar right now, not even a dollar, 0 point something, 0 0.00, 0 0.2, 0 0.5, 0.001. In those coins, check out all the performance, because in trading you can see all the performance, what, how it performed in year wise, what kind of capital market cap it is having, how much it gained in an year, how much it lost in a year, what is the trading value volume in 40 24 hours, in 1 month, in 6 months. It will give you an exact data. You can simply put that data into the chat GTP. You can ask them to give me a summary of it, and with the real use cases. Do not forget this one very important thing, that the coin which you should be investing should have a real use cases. Other than that, if that coin is not having a real use cases, it is considered as a meme coin, which is there just for fun. It's the same like just do it kind of situation. Okay, you don't have to put your value in something which is just do it. You have to put the value which is having a huge investment for a future, which a few like good use cases in the future, which can come handy, and big player may be interested in buying those. So in that, those coins which is under a dollar, you have to invest heavily. Heavily as in, like, see, it's under a dollar, obviously it won't be taking you money like BTC, Ethereum, Solana or XRP. It will take less money. Approximately, let's imagine if there is a coin which is 0.2, 0.1, 0.001. Hardly you will take $1,000, $500, or $2,000 kind of investment which you will make, and you can have a majority quantity, 50,000 lakh coins, 1 lakh coins, 2 lakh coins of that respective cryptocurrency. Okay, now patience, let patience do the work. You just have to let patience do the work. Wait for 1 year, 2 year, 3 year, 4, 5, 6, as much as you want to wait. And what is our target? Our target is not $10, our target is not $100, our target is not $1,000. Our target is very simple and very easily one, very specific. Our target is $1. Why? Because we bought the price at 0 point level, and we want to just wait in that 0 point dollar. We bought, let's say, 50,000 coins, 1 lakh coins with a very low investment. And the time it reaches $1, what it will become? That 50,000 coin, that 1 lakh coin, one coin will value at $1, and you are having a saving of $50,000, $1 lakh into your wallet. This is how a retailer should invest, rather than just going for those coins which is popular like BTC, Ethereum, blah blah. These are good for the short-term funds which you can use for the daily transactions. Good. But even in that, if you want to have a generational wealth, try to go for such coin which is under a dollar, and just wait for them to turn $1. That's all. And for that $1, I told you what kind of structures, what kind of criteria you have to check out. Performance yearly wise, 52-week high. You can see the filter over here, 52-week high. It takes all those coins which has performed the best in the year, in overall year, which has given you the best interest, best profit, best whatever XYZ, most transaction, blah 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 kind of situation. Then check out their market cap, and if they are having a limited supply or not. If they are having supply more than trillion, do not enter at those coins, because it will take ages to for big player to see that coin. Like trillions is that huge amount which people like. I have one very good example to give you, but I cannot give that example on live stream. This is a professional area. Why it is having this situations? Okay. I'm gonna take 15-minute break. I will come back. 15 minutes. A little tired. I'll take a 15-minute break and I will come back. See you guys after 15. Hey guys. Okay. So